Good day and welcome to the Max Estate Limited Q2 FY2026 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the call, please signal an operator by pressing star, then zero on your touchtone phone. Also, this conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as of the date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. I now hand the conference over to Mr. Sahil Vachani, MD and Vice Chairman of Max Estate Limited. Thank you, and over to you, sir.
Thank you, and good morning to all for joining us for this Q2 and H1 FY2026 earnings conference call for Max Estate. Joining me today, I have Nitin Kansal, our Chief CFO, and Mr. Archit Goyal, Head of IR and Corporate Finance, along with SGA, our Investor Relations Advisors. The presentation has been issued to the stock exchanges and uploaded on our company's website. I hope you've had a chance to go through that. Let me just first share some highlights at an industry level and then business highlights for the quarter and the half year ended. On the residential side, we are seeing a flight to quality and a flight to trust. The NCR is the fastest growing residential market with headline price appreciation of almost 19 to 25% year on year. There are some key emerging trends and granular shifts. On a micro market basis, the growth is not uniform. It's hyper concentrated in established high quality corridors. For example, in Gurgaon, Golf Course Extension Road, Dwarka Expressway, and on the Noida Expressway in Noida. In these micro markets, the premium for trusted institutional developers has expanded to more than 25% of the last 2 years. The second trend that we see is shifting demand drivers. The demand is by an affluent buyer base that is prioritizing quality lifestyle through an ecosystem of amenities and clear delivery track record. There's a structural realignment towards a more premium segment than was earlier. On the commercial side, in the last quarter, the region's net office leasing surged 2.5 times year on year, driven by resilient corporate demand. Global capability centers, domestic corporate occupiers are driving a decisive shift towards premium grade A assets, willing to pay a premium for high quality, sustainable and future ready workspaces. Max Estate's ability to secure 100% occupancy across all our 3 assets at rents that are 25% above the micro market average is a clear direct reflection of the scarcity of truly superior institutional grade commercial products in the region. On the residential side, I'm happy to share that till date, Max Estate has recorded accumulated pre-sales of over 7,500 crores. Estate 128 fully sold, having booked 2,700 crores, has collected 1,000 crores as of September 2025. Estate 360 in Gurgaon recorded pre-sales of 4,800 crores with 100% of the project sold, and we've collected approximately 950 crores as of September 2025 as well. Both these projects are progressing as per plan. The slab and draft milestones have been reached across towers, and we remain on track for the timelines communicated earlier. Estate 128 Phase 1 tower slabs are progressing, and Estate 360 raft and basement works are substantially complete. On the commercial side, lease rental income for the period grew significantly and stands at approximately 75 crores for the first half of the year, driven by full occupancy across our operating assets. With notable marquee tenants such as Adobe, BBC, Target, and leading law and technology firms. We are on track to achieve a annuity rental income potential of over 700 crores over the coming few years, underscoring the resilience and balance of our diversified portfolio. I'm also extremely proud to announce that Max Estates has achieved a dual 5-star rating in development and standing investment categories of GRESB. This comes with a number 1 rank assigned across its predefined peer entities by GRESB in both categories, thereby reflecting industry-wide recognition. This milestone positions Max Estates among the top 20% of real estate entities globally in terms of ESG practices. On our growth strategy, I would like to reiterate the announcement that we have recently secured development rights for a 7.25-acre parcel in Sector 59, Golf Course Extension Road in Gurgaon, with 1.3 million square feet of development for residential with a GDV anticipated at more than 3,000 crores. This deal marks Max Estate's continued expansion in Gurugram's luxury residential market. With this addition, our total GDV of acquired and yet to be launched projects now stands at 17,000 crores. Of this, we plan to launch projects in the second half of this year with a cumulative GDV of 9,500 crores across three developments: Estate 361, Max 1, and Max 105, located in both Noida and Gurugram. These launches, all in the second half of this year, are expected to drive pre-sales of approximately INR 6,000 to 6,500 crore in FY2026, representing a growth of 15 to 20% over the previous financial year. With these highlights, I now hand over the call to my colleague Nitin for financial updates. Nitin, over to you.
Thank you, Sahil. Good morning, everyone, and thank you for joining us on the call. Let me provide you with the financial updates for the half year FY26. The consolidated revenue stood at rupees 100 crores in half year, a growth of 24% on a year-on-year basis. The consolidated EBITDA stood at rupees 24 crores in the first half of the financial year. The consolidated profit before tax stood at 29 crores and PAT stood at rupees 20 crores in the first half year. The total lease area in the portfolio stood at 1.3 million square feet, 100% across our operational assets. The lease rental income showed a growth of 41% year-on-year to rupees 76 crores in the first half of the year. The revenues from the facility arm Max Fit Services stood at rupees 26 crores in first half of the year, growing 33% year-on-year. The cash and cash equivalents in the balance sheets were 1,900 crores as of 30th September and a borrowing of close to 1,550 crores, having a net cash balance of close to 350 crores. This borrowing also had a component of 867 crores on account of lease rental discounting. We continue to maintain a conservative leverage posture as we scale. Now I'd like to hand over Ray for the question and answer session. Thank you.
Sure. Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask questions, please press star and 1. The first question is from Mohit Agarwal from IIFL. Please go ahead.
Yeah, good morning, everyone, and thanks for the opportunity. Sahil, you reiterated that you will do 3 launches in second half. So 2 questions on that. What are the specific timelines for each of the launches, and if you could elaborate on what are the stage of approvals for each of them, whatever you can share. And secondly, if you could elaborate on the kind of product that we will see in each of them. It will be similar, or are you making a differentiation between what you're launching in 36A and 105 and Delhi 1?
Sure. Thank you, Mohit. We start with early part of December, where we are planning to launch Estate 361, which is going to be a development in Gurugram in Sector 36A. We received our building plan approvals and we are awaiting final RERA approval for this. Then followed by, so this product will have a mix of an Antara senior living component and also Max Estates residential. So it's an intergenerational offering for the Gurugram market. The second is going to be in January, which is going to be our original development Max 1, Delhi 1 project that we took from NCLT. We are in the final stages of building plan and RERA approval for that as well. And the third development, which is going to be in Noida, which is in Estate 105, will be the end of January, early February, which is in final approval stages as well as we speak for both building plan and RERA. The Max 1 or the Delhi 1 product is obviously a very high-end, luxurious product of 35 plus crore ticket size, but very few units that we have there, limited select by invitation. And our Estate 105 product in Noida is more in line with what we have done in the past year in Estate, 2 years ago in Estate 128 as well. So I hope that answers your question, Mohit.
Yeah, perfect. Just for 105 and Delhi 1, have you applied for RERA?
Not yet.
Okay. Sahil, my second question is again, on your opening comments, you mentioned that the growth is now, happening in pockets, and you mentioned some micro markets in Gurgaon and Noida. Just wanted to clarify that, our understanding has been that relatively Noida has been of late performing better. Do you think there also, in terms of what price appreciation we've seen, the story has moved to pockets, and in general, kind of, would you rate now Gurgaon and Noida kind of similar in terms of, kind of stability in price appreciation and all of that, or do you still think Noida has more room to grow in terms of prices?
No, we believe that Noida has significantly more room to grow as well. Having said that, Mohit, our view is that it's very difficult to take a generic view across market. I think it's going to be specifically project linked. I think that those projects that are able to offer the ecosystem, the amenities, the customer experience, will see a much higher, faster appreciation within that project, whether they are in Noida or in Gurugram. And that's our view moving forward. We've already seen that with some projects in the past, and I think so they're location agnostic but project specific. So we see that appreciation in the coming years is going to be driven strongly by project rather than only by micro market. Thank you.
Sure, that's great. Those are my questions. Thanks and all the best.
Thank you.
Thank you. Before we take the next question, a reminder to participants that you may press star and 1 to join the question queue. The next question is from Pritesh Sheth from Axis Capital. Please go ahead.
Yeah, thanks for the opportunity and good morning to everyone. First question is on the business development. While we have had a good start to the year, I think 3 projects roughly added, we still have 20 million square feet of projects under evaluation. But given we have already achieved our target in terms of business development, should we expect any more addition this year, or probably now you'll focus more on launches and project addition would happen next year only? That's my first question.
Thank you, Pritesh. Yes, we are focused very much on our launches and sales in the second half of the year. And in terms of your question on business development, the process of business development is a long process. For example, the recent project that we acquired in Golf Course Extension Road took us almost 18 months. So I think the process of business development is ongoing. We evaluate hundreds of these, and we will continue to do that. So we are not stopping our process of business development. Yet at the same time, in the coming months, obviously we will be focused very clearly on sales.
Got it. Second, on the rental income, 38 crore this quarter makes it like 150 crore plus of annualized number. Is this a steady state number that we wanted to achieve, or there is still some bit of leasing yet to contribute in terms of rentals and there is still more scope to grow? So just some comment on that.
Yeah, Pritesh, if I may answer that. So all our 4 operational assets now are currently running at 100% occupancy, and this number now, the first project which went off the block, Max Towers and Max House, will start having escalations of 15% post completion of 3 years. So this number will show a natural growth for the next year, and then for starting from FY2028-2029, we would have flow of other commercial portfolios start kicking in, whereby we would be looking at total commercial portfolio rental in excess of 700 crores.
Sure. And you have, across all the contracts that you have signed till now, you have 15% escalation, every 3 years, or there is annual escalation also for some of the contracts?
No, we have a 3-year escalation contract of 15% across all our leases.
Sure. Got it. Okay. And one on cash flows. So, collection, we had roughly 320 odd crore of collection. Just in terms of the spends for this quarter, in terms of construction, capex, and land, if you can, give that number if it's handy, or else I'll take it offline.
So in the current year, we have spent what across the projects, we will be spending on the residential side close to 800 crores on the entire construction of the projects which we have, including the 361. And in terms of commercial, we will be spending at close to 300 to 400 crores on the commercial construction during the current financial.
Yeah, I'm just talking about maybe a first half number or current quarter number, how much we have spent already.
So in the current quarter, we would have spent close to 250 crores on the residential and a number of close to 175 crores on the commercial side.
Okay, and land side?
So we had signed up this transaction of Sector 59 on the Golf Course Extension Road. We have deployed close to 64 crores on that, and the balance capital needs to go.
Sure, got it. And one last, if to Sahil, any update on the Delhi master plan, land pooling policy? At what stage the approvals are? What are you hearing from the market? By when it can come?
Yes, we understand that there have been the first sector in this region that has got the notice from DDA to go ahead. And we are now hopeful and confident that the other sectors as well, ours included, should get requisite approval. So the process has already begun, particularly for within this area, and DDA has started actioning that already. So happy to share that.
So that's for the land pooling policy.
That's correct.
Okay. Helpful. Thank you. That's it from my side, and all the best.
Thank you.
Thank you. Next question is from Jayashree Bajaj from Trinetra Asset Managers. Please go ahead.
Hello, sir. Thanks for the opportunity. My question is on commercial rental growth, that all operational CRE assets are 100% occupied. So what are the strategies in place to maintain the 20 to 25% premium rental pricing over the micro market rates when renewing the leases? And how are the target annuity rentals of 110 plus CR for Max Square 2 and 200 plus CR for Max District expected to be achieved upon completion?
Nitin, you want to take? Nitin, please go ahead.
Sure. Thank you, Sahil. Let me answer that. So what is happening currently, if you say, we have entered into long-term leases with the lessees, which have a 9-year contract. And we at all points of time continue aspire to increase the customer experience in our buildings, which entails a regular increase in the customer experience. Just to give an example, we have also mentioned in our presentation where they significantly upgraded our F&B offerings across our assets at Max Towers and Max House. So what we believe that continuous upgrade in the customer experience helps us maintain the rate. Furthermore, if you see our presentation, we have also mentioned our weighted average rentals are more. In the case of Max Towers, we are at 125, but what we are achieving the last rental is 141. So all the current rentals are already, people are already sitting at a mark to market, which is in excess of 10 to 15% when the new leases will come, which kind of prompts the people to stick and stay with the company. In terms of when we say our new projects, Max Square 2, in which we have projected a number of 110 crores and Max District 60 of 200 crores, so these numbers we have projected, we have taken a conservative lens in projecting these numbers. So what we've assumed is that whatever is the prevailing rate, say in case of Max Square or the prevailing rate of comparative assets in Gurgaon, if we achieve the same rate and we do a leasing over a period of span of 12 to 18 months, we would be able to achieve these rentals. So very confident to achieving these numbers, and in fact they have not factored in an inflation which will take place while in the time the building gets delivered.
Okay. Got it. That's all.
Thank you.
Thank you. The next question is from Karan Khanna from Ambit Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity. Hi, Sahil. Hi, Nitin. Just two questions from my side. So, Sahil, first, if you look at the launches that are planned for FY2026, essentially, what kind of embedded margins are you seeing on new business development? Let's say the one that you recently announced in Gurgaon. Sector 59. I'm just curious to know if, while the prices have gone up, even the expectations from the landowner side, that's gone up. So what kind of margins are you seeing in new business development now versus, let's say, 2 years back?
Thanks, Karan. We are seeing similar margins for ourselves. We are underwriting conservatively, as we have always consistently shared. We underwrite without assuming that prices will increase. We underwrite assuming that it's going to take us, an elongated period of time to sell, and we underwrite assuming, very high inflation in construction costs. So with that assumption, we are continuing to be confident of 40% margins in outright and 20% margins on joint development. So we are confident of sticking to these numbers as we move forward.
So just as a follow-up, given that you have about 2 launches in Gurgaon that are planned over the next 12 to 18 months, when you speak with your channel partners, what's the kind of feedback that you're getting in terms of on-ground, demand environment, considering that we had seen, certain projects being sold out in a matter of few days or weeks earlier? Is that the kind of footfall that you're seeing right now as well, or perhaps there is some slowdown in terms of the overall demand environment?
Firstly, in terms of the overall demand sentiment and environment, yes, there is some sort of a cooling off. At least that's what our partners share with us in terms of sentiment. Having said that, and it's important to classify this point, that for Max Estates particularly, we are not seeing that. I think we are very fortunate to have a brand and, customers perceive Max Estates products and experiences, and they know that we operate at a much higher level in terms of customer experience, a product and ecosystem. And therefore, for us, we are not seeing that level of slowdown. Second, the benefit for us is that particularly in Gurgaon and in what we are launching this year, we have a mix of we have an intergenerational offering. So we have, Antara Senior Living and Max Estates. So we have both products, brands that we are offering to clients within the first product launch that we have. And our second project that will come next year is in a very, very strong location. It's almost called Coast Road. So, there's a high level of excitement and energy about that product already.
Sure. And the second question, Sahil, I understand that the Estate 36A project will be an intergenerational project. So even DLF recently mentioned that one of the new project launches over the next couple of quarters will have a dedicated senior living housing sort of a project that they're looking to launch. So given that this is still an upcoming theme, so could you share your thoughts in terms of how you plan to see, even the competition is increasing, but the opportunity is there. How should one really think of this opportunity in the NCR market?
Yes. So for senior living, we believe that we are at such a nascent stage of the opportunity, and we've been at it for 10 years, is that other stronger brands coming or other players coming will only help expand the size of the market. So at this stage, we feel it's good for the overall size of the senior living market, and the market will expand with strong brands coming in. Second, I think with us particularly, we are very confident in our offering. We have been at it for 13 years already in senior living. We have got operating communities. We've dealt with the care aspect of it for our seniors. So we are able to see it beyond real estate and for the care business that it is. And we have a separate listed company, Max India, that is absolutely focused on providing a platform of care for seniors. So we believe that there's a strong competitive advantage that exists within the group to continue to scale and grow our senior living business very, very senior care business profitably. And for Max Estates, particularly the fact that we have this on our balance sheet to sell is a very strong enabler for our growth as well in the Gurgaon market. So yeah, we are very optimistic, confident, and very bullish on the future of the size of the market, even with other players coming in.
Sure. This is helpful. And my last question, if you look at the indicative growth pipeline as well as recent business development that you've done, it's largely focusing on the residential market. But Do you see an upside risk to your, let's say, 730 crores of annuity EBITDA, annuity revenue over the next 3-4 years in terms of new projects that might get added here? Or is that a conscious strategy where now your focus will be more on the residential side, and perhaps when you see the right transactions in the commercial, right opportunity in the commercial side, you might take that up?
No, actually, Karan, if you look at it, this year we've already added 1.2 million on our commercial portfolio, which is in Sector 105 in Noida, through
Sure.
what we had done in the auction. That's a mixed use. So there's some residential and there's commercial as well there. So it's not that we have not added to our commercial portfolio. We've added that. I think we acquired it in March of 2025. So just about 7 months ago, we've added 1.5 million square feet there as well. Yes, we do see some. We are very optimistic and bullish, and we see upside to the rental income of 700 crores, and we are confident that we should be able to definitely achieve this and grow this number as well. On the growth side, we are absolutely looking at growing this portfolio. We have a committed joint venture partner here with New York Life. We are their exclusive partners for India. And I am very confident that we will be able to scale this in the coming years to a very attractive, potentially readable portfolio.
This is great, sir. Thank you and all the best.
Thank you, Karan.
Thank you. The next question is from Ronald Sioni from ICICI Securities. Please go ahead.
Good afternoon, sir, and thank you for the opportunity. In terms of the 3 launches which you have provided, if you can break down in terms of area and GDV value, because like 9,000 crores, 361 is a huge project. So what kind of GDV from that we are expected to build up, and similarly for the balance 2 projects?
Yeah. Sure, Ronald. Good morning. This is Nitin. What we are expecting to do a launch of close to 4,500 crores. Let's put it at 9,500 crores, and if we do across 3 assets. So in the Gurgaon, we're looking at a launch of close to 4,500 crores. In terms of estate 105, we're looking at a number of 3,000 crores. And the Delhi one, a number of approximately 2,000 crores. All totals up to 9,500. And what we have, the guidance which we have given is to achieve a number in the range of 6,000 to 6,500 crores of pre-sales in the current financial.
And in terms of this new acquisition, so should we expect the 105 Noida new acquisition project in H1 or H2 of FY27?
So this acquisition which we have done of 105, which we are doing in the current financial year, the acquisition had closed in the month of March. The current acquisition which we have done on the Golf Course Extension Road, Sector 59, that you can expect in H2 of FY27.
And that would be again at a one go, or it would be in phase?
We are still work in progress. I think, and depending on how the designs shape up and the strategy shapes up, we would be able to give much more clarity on that, whether we would be launching in a one go or in multiple phases.
Thank you very much, sir, and best of luck.
Thank you.
Thank you. Before we take the next question, a reminder to participants that you may press star and 1 to ask questions. Next question is from Sukrit Patil from Eyesight Fintrade. Please go ahead.
Good afternoon to the team. I have 2 questions. One for Mr. Vachani. As more players get enter the premium real estate space, what is Max Estates doing to build a strong edge, not just through design or branding, but through something deeper like a culture or operating philosophy that compounds over time and makes the company truly hard to replace? Yes, sir. Thank you.
Thank you for that. We are very clear that our product and our customer experience is going to speak louder than any marketing activity that we would do, and that is the word of mouth of our customers day in and day out in our products is what is going to be our differentiating factor. And we are focusing our entire energy of the entire organization to make sure that the product, the customer experience, and the customer journey, whether it's a work well experience at Max at our office projects or a live well experience for residential communities, is world class. So that's what we are focused on. We are focused and we are committed to bringing well-being to our real estate offering. We come from that world, and therefore that's deeply ingrained in our culture, and we are very confident that that will set us apart even more than what we have done in the past.
Thank you. My second question is to Mr. Concall. As urban development cost and buyer expectation keeps on rising, how are you planning to protect the margins? And are there any internal design or procurement innovations that are quietly helping you maintain premium quality without margin erosion, even if they don't show up on the headlines of the numbers? Thank you.
Yeah, it's a very interesting question. See, I think cost optimization is a continuous process, and as we grow, and as we have grown in past, starting from few million square feet, now we're sitting at close to 18 million square feet. So I think cost optimization without compromising on the design philosophy and customer experience is something which the team really works hard on that. How much we would be able to achieve I think we would be able to detail out much more in future.
Okay, thank you for the guidance, and I wish the entire team best of luck for Q3.
Thank you. Participants who wish to ask questions, please press star and 1. The next question is from Saurabh Manchanda from Arya International. Please go ahead.
Yeah, hi, how are you? My question, I have two questions. First being, this was something I wanted to understand, that New York Life is mostly invested in the commercial side of your assets. Is there any particular reason why, and why are they not in the residential side of the assets?
So, they being life insurance company, they have a preference for annuity-like business. But having said that, if you see the last couple of investments which they have done with us, they've also entered into mixed-use parcels with us in Max 1, as well known as Delhi 1, and Estate 105. In both the projects they've entered, whereby they are taking both residential and commercial participation. But at current juncture, they are not evaluating doing exclusive residential transactions with us.
Okay. And are they committing to some more investments in the future?
So, just to give you context, New York Life runs a very large asset management book out of USA, manage in excess of $700 billion across their portfolio across the globe. And we have been one partner with them, which they have invested a number of close to $200 million till now. And so, although we don't have a platform like kind of a deal with them, but the clear direction and vision is to scale this partnership to a significant, meaningful level from their lens.
Okay. And what is the percentage of their current holding, if you could just tell me once?
So on the listed entity, they are the shareholders to the extent of 22%, and in terms of on the commercial assets, they are holding close to 49% across the commercial portfolio.
Okay. And apart from the Delhi and NCR market, are you planning to enter any new markets right outside Delhi NCR or within Delhi NCR?
So what we believe the opportunity is very large in Delhi NCR itself. So at least in near foreseeable future, we would like to focus on Delhi NCR. And as time progresses in a subsequently medium to long term, we would, in case any developments, we'll certainly share with you.
Okay. Thank you.
Thank you.
Thank you very much. That was the last question in queue. I would now like to hand the conference over to Mr. Sahil Vachani for any closing comments.
Thank you for joining, and look forward to speaking to you again next quarter. Thank you.
Thank you very much. On behalf of Max Estates Limited, that concludes the conference. Thank you for joining us, ladies and gentlemen. You may now disconnect your lines.